Alrighty, so in this video, I'm going to be talking about what is market structure and how you can identify whenever there is a shift, whenever there is a change in market structure. There's countless ways to make money from the market. There's a million ways to skin a cat, but there is a few things that I believe every single trader needs to know. It is absolutely critical to your success, to your longevity in this business, and market structure is one of those things. So market structure is one of those things that you absolutely, without a doubt, you have to understand. If you don't have a firm grasp of what market structure that you're operating within, then your chance of success in this business is very, very, very slim. Okay, so I'm just gonna use GBP USD as an example, and we're gonna break this down step by step. So this is a weekly chart right here on GBP USD. So this is the structure, the market structure on GBP USD at the current moment is bearish. Okay, clearly bearish market structure here. So why is it bearish market structure? What is making this a bearish market structure? So put simply, a bearish market structure, it is putting in consistent lower lows and consistent lower lows and consistent lower highs. So you can see right here what happens: breaks a low, comes down, you get a little retracement higher, puts in what? A lower high, comes down, what do you get put in? Another high, boom, comes down, there's your leg lower, impulse leg up, puts in another lower high. So put simply, you're operating within a bearish market structure whenever price is putting in consistent lower highs and it's making consistent lows like it is here. See, breaking lows, breaking lows, breaking lows, putting in lower highs. That is a bearish market structure. And then, you know, for bullish market structure, you just switch it around. So for example, back here, if we zoom back a little bit, you can see for a short period or for a period of time, it was operating within a bullish market structure. So right up here, see how it's putting in consistent higher lows in this, if you look at my cursor, see this period of price action, see this leg up right here. During that period of time, it was operating within a bullish market structure. See how it was breaking new highs? So see how it broke these highs right here? Boom, clean that out. That's your impulse leg higher. Then does what? It pulls back. Okay, and when it pulls back, what does it put in? It puts in a lower high. Okay, or my mistake, a higher low. So it puts in a higher low right here. See this swing low? Lowest low in the middle. There's two higher lows on the left and the right. There's a swing low. And then what happens? Boom, you get your next leg up higher. What does that next leg up higher do? It breaks this previous high. See that? Breaks that previous high. What happens? It pulls back, right? Same exact process. What happens when it pulls back? It finds its bottom. It puts in what? It puts in a swing low. Lowest low in the middle. Again, what's a swing low? A swing low is it's simply whenever you have your lowest low in the middle and two higher lows on the left and the right. That's a swing low. That's where it puts in its bottom at. And what happens after it puts in a swing low? It grinds up higher and does what? Breaks the previous high. So that is a prime example of price operating within a bullish market structure. It's consistently breaking new highs. It's consistently breaking highs, putting in consistent higher lows. That is a bullish market structure, and that is a bearish market structure, like I just went over at the beginning of this video. Okay, now something you got to understand is market structure or price is fractal. Okay, so what does that mean when I say price is fractal? Meaning that this occurs on every time frame. Okay, the process that I just laid out for you, that's on every single time frame. So if we go to a daily chart, for example, you know, you can see same exact deal on the daily chart. It's this, so for example, right here, it's this what is this? That's a bearish market structure. So it's breaking new lows. So you just had this really large move lower, and now we have this pullback. We have this pullback within this range. This is operating within a bearish market structure right now. Okay, and this market structure on the daily will remain bearish until when it breaks this swing high right here. See the swing high? If we were to break this swing high and put in a swing low and then resume to the upside, at that point, market structure is bullish. Okay, so I know I might have lost a few of you right there, so let's break that down a little bit further, what I mean by that. So here, let me get a trend line. So when would this, because we've already concluded that this is operating within a bearish market structure, but when would, say for example, this doesn't want to go lower? It's just because anything can happen. Okay, it's bearish right now. This is clearly, without a doubt, bearish 100%. But say it does, say something happens and it wants to move higher. When do we know that it's a shift in structure and that we're now operating within a bullish structure? So what did I just say? In a bearish market structure, we're putting in what? We're consistently breaking previous lows and we're putting in consistent lower highs, right? So a shift in structure, what you want to see is, so say price does this, it comes up, there's your price leg up higher, okay? So just imagine for a second, price rallies up higher, okay? And it breaks that high. At that very moment, that is a shift in structure, okay? That's a shift in market structure if it breaks that swing high. But really, it's smarter to wait for a little more confirmation before you start looking for buys. So what do I mean when I say look for more confirmation? After that breaks that swing high, okay? After it breaks that swing high, what do we want to see next? Remember what I just said about what makes something in a bullish market structure and a bearish market structure? Remember, bullish structure, consistent higher lows, okay? So if we break that high, what do we want to see get put in? We see it break that high, we want to see it put in a lower or a higher low, okay? So just like on that weekly chart I was going over a second ago, just a second ago I was going over how we were operating within this bullish market structure. See how it was putting in consistent higher lows, consistent higher lows, consistent higher lows, consistent higher lows. You want to see that same thing occur after that shift in structure right here. It breaks that shift in structure. You want to see it put in a swing low and then attack the highs, and then attack the highs, put in a consistent swing low or another lower or another higher low, and so on and so forth, okay? So that's what you want to see for that shift in structure. And this is really important because why did I say at the beginning of this video that this is a must for every trader to grasp, to understand? Because a big problem that a lot of beginner traders get into is, for example, they might be buying something on a 5-minute chart or a 15-minute chart where the structure is bullish, for example. So they might be buying something that's operating within a bullish market structure. It looks good, it's bullish, it's consistently making new highs on that time frame that they're trading within. But since they don't have a firm grasp of market structure, they could be buying that whenever the 4-hour chart is operating within a bearish market structure, when the 4-hour is trading up into a premium market, okay? And if you do that, then, well, that's a recipe for disaster. So that's why it's really important to have a firm grasp of market structure, because you need to know what you're operating within, right? So again, let's give some examples here. So GBP USD, let's go to a 4-hour chart. So say you're day trading, say you're a scalper. So right here, this is another prime example of when on the 4-hour chart, so that's what we're on now, just make sure we're on the same page. This is a 4-hour chart. This is a prime example when it was operating within, for this period of time, it was operating within a bullish market structure on the 4-hour. So you see right here, what happened? Boom, you get a big break of that level. Just a huge impulse leg up higher. Right here, boom, breaks that level. That is your shift in structure. Now, what did I just say a second ago? What did I just say a second ago on the daily chart when I was breaking that down? What do you want to see happen after you get that shift in structure? You want to see a swing low get put in, okay? Because that's your higher low. That's part of the bullish market structure. What happens? What do we get put in right here? Swing low. Lowest low in the middle, a higher low on the left, a higher low on the right. There is your swing low right after that strong keyword there, strong shift in structure. Put in a swing low and does what? It attacks the highs. Okay, so now at that point we're off. It's operating within a bullish structure. See, it's consistently grinding higher, and then does what? It pulls back, puts in another swing low. So another swing low, and then it attacks this high, puts in another swing low, attacks this high. So see how it's consistently grinding up. Okay, and where did that switch happen this time? To the downside. See that swing low right there? What happened? Boom, impulse move lower, does what? Strong shift, leaves a fair value gap in there, as you can see. 1, 2, 3, and I have a video on fair value gaps for anyone that's wondering what that is, but this in here is a fair value gap. You can see on the 4-hour chart with that shift in structure, very important. And what happens? Price does what? It trades up into that fair value gap, aka a premium market, and it puts in a swing high. So now we are off to the downside. Now we're now operating within a bearish market structure on the 4-hour. So during this period of time, we were operating within a bullish market structure. Like I said, we had that shift, and then it was putting in consistent higher lows. Again, for those higher lows, where do we find it? It's simply swing low levels. Swing low levels is all it is, okay? So, and again, a swing low is whenever you got your lowest low in the middle and you got a higher low on the left and a higher low on the right. That's what makes a swing low, and we're seeing those get put in consistently to the upside while it's grinding up higher, making consistent highs. That's when we were operating within a bullish structure, broke it, shift in structure, puts in a swing high. As soon as it puts in that swing high and it attacks that low right there, we are now operating within a bearish structure. And once we're operating within a bearish structure, what do we want to see price do? We want to see it attack this low, right? What does it do? It attacks that low. What do we wait for? We wait for the pullback. Boom, it pulls back, puts in a swing high again, and now it's attacking the lows again. So that is, put simply, how you can determine whenever price is in a bullish or bearish market structure. Simply, you wait for that shift in structure that I just went over, and then you wait for the swing to get put in, and then you look for price to resume in the other direction. That's how you know, okay? Now, let's go down to a lower time frame, okay? Because I'm gonna give you an example. Full transparency, I did not trade this, but it's a setup that I could see. It's a setup that I saw for a scalp on the lower time frames. So GBP USD. So right here, so this is on the 6th, okay? So this is on 10/6/2022. So if you were to zoom back out to your daily chart, we've already concluded on the 6th, it's clearly operating within a bearish market structure. Let me just zoom out one more time so I'll make sure we're on the same page and nobody's lost. Okay, so this is the 6th, all right? So this is the 6th right here. Look at my cursor. So at that point, we've already had that shift in structure. We've already put in a swing high and we're already moving back to the downside. So at that point, the 4-hour structure is no longer bullish. And why am I using the 4-hour chart? Well, me personally, with my trading, I use really large time frames. I use weekly, I use daily, 4-hour. But I know I'm using the 4-hour because I know this is really common for a day trader and a scalper, and I know that's what a lot of you do. So this is the 4-hour chart is the main time frame that for a scalper, for a day trader, it's that larger time frame. And the 4-hour chart is really important for you to understand what structure you're operating within. Because if you're a beginner, if you're a new trader, your best bet, and my advice to you, is to make sure you are trading within in the direction of the larger time frame structure. That's another key point that I'm really trying to get across in this video. Make sure you're trading in the direction of the larger time frame structure. Very important. Now, is there people that can counter trade successfully? Absolutely. But you as a beginner, you as someone that's still trying to find that consistency, that is not something you need to be trying to do. You need to be trading with the structure. Very, very important. You need to make sure you are trading with the structure. Okay, so that's why I have this 4-hour chart right here, and we've already concluded we're trading with the 4-hour structure. And then same deal on the 1 hour. You can see the 1 hour is doing what? See that swing low right here? It breaks that swing low, puts in what? Puts in a swing high, and then we're off. And the 1 hour structure obviously is bearish as well at that point. After we broke that, we put in that swing high, we resumed lower. Bearish structure on the 1 hour chart too. Okay, so if you flip down your time frames, you're bearish on every time frame at that point. That's what you want. That's what you want. Okay, that's that lowest hanging fruit when you have everything in conjunction. When you're trading with everything in conjunction, that's that lowest hanging fruit. Those are the easiest plays. Okay, now I'm going to bring this up because, and I'm going to give you a little quiz real quick, and I want you to answer among yourselves. So 1 second. Because I thought this would make a good example. Right here, are we in a bullish market structure on the 5-minute chart after it breaks? Right here. So right here, see at 520, it comes up, breaks that. Are we operating within a bullish market structure? No, we need one more thing. So this right here is actually, this is just a stop run. That's all that is. That is a run on those stops right there. It took out those sell stops and then it resumed lower. That we are not operating within a 5-minute bullish market structure yet. Now, if it broke that, put in a swing low, resumed higher, at that point, that's something different. But this right here, this is simply a stop run. Okay, so it took those stops, traded up into that fair value gap, up into that order block, and it resumed lower. Same deal right here. It took those stops, resumed lower. So here, 1 second. All right, and then what happened after it did that? Price does what? Price is going to want to do what next? It's going to want to attack that liquidity, and that's what it did. It attacked that liquidity. And yep, so that's really all there is to market structure. It's not a very complicated concept to understand. It's really simple, but it is very, very important to your success because, again, if you're a newer trader and you lack that experience, then you want to make it as easy as you can. You want to go with the flow, meaning you want to be trading with the structure that you want to make sure you're trading with that larger time frame structure. Okay, so for example, if you're a scalper at the very least, for a larger time frame, you want to make sure you're using that 4 hour. That's what I use. I hold things a little bit longer. Sometimes I'll hold overnight. Sometimes I'll hold for a couple days. So I utilize other time frames like the weekly, the daily. But I would, at the very least, if you're a day trader or a scalper for that larger time frame, at least use the 4 hour and make sure, my advice to you, if you're making money consistently, then whatever you're doing, then keep doing what you're doing. But for those that are still kind of struggling to find that consistency, and they might be feeling a little lost, make sure you're trading within the correct market structure. That's one thing that you need to have down right away. So if you are in a bearish market structure, so just say, for example, you're a day trader, you're a scalper. If the market structure is bearish, like it is right now on GBP USD, you only want to be selling, okay? You don't want to be buying. You don't want to be fighting it. You only want to be looking for sales, okay? If it's bullish like it was in here, you only want to be looking for buys. And preferably, and like I said, remember, price is fractal. So each time frame, it's better if you have each time frame lining up one after another. Okay, so if you're bearish, you want to see it bearish on the 4 hour, bearish on the 1 hour, bearish on the 15 minute. And then at that point, you're operating within, you have multiple time frames all in conjunction. Then that one thing alone improves your odds of success dramatically. Okay. Now I know it's tempting to try to catch, the top of this, trying to catch the exact top. And I've done that plenty of times in the past. The easy money is waiting on, well, if you're shorting, waiting on that backside, or if you're buying, waiting for the move to the upside waiting for it to already start, waiting for it to already begin. Don't try to let it have that confirmation, is where I'm getting at. Let it have that confirmation before you try to take anything. All right. So again, bullish structure is simply consistent higher lows. It's consistently breaking its highs. Bearish structure is consistently cracking its lows, putting in consistent lower highs. All right. So hopefully you found this video useful. If you did, make sure you leave a like, make sure you subscribe, leave a comment, and yep, I will catch you later.